Done. 8:12. Okay. Should we begin, folks? All right then. Get your comments rolling. Let me know. Good morning, Nishant says Mr. Sumit Kumar. Good morning, Mr. Kumar. I guess you can hear me. If you can hear me, we will begin the show that we deserve. The show that makes everything worth it. The show that gets us up in the morning and ready to roll. The show of all shows. Yes. And so we begin. Bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We are working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis, which don't lead to paralysis right before we punch it. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go! But before we go, you gotta follow a tradition, right? You know the tradition. You know the sweet and sacred tradition of the simultaneous sip. We'll all sip something together and it'll bring us good luck, as it always does, without fail, every day. And all you need for the simultaneous sip is a cup or mug, a glass, a tank, a chalice, a stein, a canteen jug, a flask, or a vessel of any kind. Pour it with your favorite liquid. I like some hot water with black pepper in it. And here we go. Beautiful. Sublime. Let's do it again. Lovely. You know what the simultaneous sip says, right? You know what it says? It says that you are not alone. It says that we are in this together. And that's such a beautiful thing to say. With that out of the way, let's begin. So, elephant in the room. Gold fell 6% yesterday. A single day fall, largest in a very long time. Greatest fall. This happened last in 2013, right? After the crash, everything. This was the single biggest day fall. And then 2005, it subsided at 5.5% or something of that sort, the fall, which basically made it the biggest since 2020, 5 years, right? Now, people are coming up with their own analysis of the situation, of course. The mainstream view is that it's profit booking. Gold rally yielded unprecedented results, right? Unprecedented returns. And those returns, people benefited from those returns and they're on to profit booking. And when that profit booking happened, gold fell. Also because US interest rates are going to get reduced very soon. So the call is favorable about the interest rates, which leads to a lot of action in the economy, right? We know what happens when the interest rates fall. Viewers of Thinker's Frequency, we've talked about it. So when interest rates fall, a lot of money goes into the economy. A lot of lending activity happens. A lot of economic activity is spurred. Growth is spurred. With a lot of growth in the markets, people feel that there are favorable green shoots in the fiat system, in the formal financial system. So they took some money out of the gold play. 5%. Now let's see what happens tomorrow. Meanwhile, the gold is gonna open up in India today. The market, it was closed, of course, because of Diwali, and this means it'll be a good news for people in India. Why? Because Indians have been trying to get into the gold play, but prices were prohibitive. Even though in value terms and in volume terms, gold purchases were great. However, majority of Indians were not being able to get in the gold rush, so to speak, because of the prohibitive pricing. Now, 5% reduction is a lot, right? 5.5, 6%, that's just huge. So, a lot of gold will be bought because the festive season is still on, and people who were not being able to buy will be able to buy now. So, there's going to be a favorable entry, which will sort of balance things out on the gold front. So a lot of gold buying happening, right? That's the clear way forward. What's going to happen in the market? Meanwhile, in Diwali's Muhurat trading session, there was a big move, right? Markets rallied in the Muhurat trading session, which was incredible. A lot of stocks just went crazy. The stocks have not been doing, I mean, if you look at the market vis-a-vis gold or silver, it's not returned that much, right? But everything looks very, very different now. India Inc.'s earnings have grown. India Inc.'s uh, liquidity is tight. Banking, lending, credit growth is awesome, right? Consumption is great. Private capex is also fueling in thanks to the data center play. So if you look at the data center, 9 gigawatt capacity seen by 32 on $50 billion inflow. $15 billion have already come in from Google. I mean, when I say come in, they've been announced. $8.3 billion from Amazon, and so on and so on. So there's going to be a $50 billion inflow on the private capex front, just basis the data center play. Then there's of course real estate. Then there's the power play. When you look at power companies, NTPC and the likes, they've spent 35% of their annual uh, capex allocation already in the fiscal year. So that's pretty balanced. So they're on. Data center private capex is on. Then there's some other industries which are looking at more capex. So God knows what happens to the global economy, but Indian economy is really flying off the shelf, right? I mean, it's crazy whatever is happening. There is no bad news. You can't look at a bad news even if you wanted to at the moment. That's how strong the Indian economy scene is, right? But global risks remain, of course, right? Trump and Xi are going to be meeting next week, perhaps, and people are bullish because Trump has sort of backed down on his hard ball stance on China, and since he's bogged down a little, everybody's positive that it's not going to be a conflict kind of a confrontation, right? It's not going to be a confrontational meet. Also, Taiwan is not going to be an issue because Taiwan is the bone in everybody's neck, right? It's just very, very conflicting. Also, TSMC has started, is going to start making things in US, the chips. So that sort of reduces US dependency on Taiwan. However, uh, things are, globally speaking, are a little off. Of course, the Israel Hamas deal that was supposed to happen, that has proved to be a damn squib. That has proved to be a TV ending, as we called it. Viewers of Thinkers Frequency, remember. So that's what's happening. Russian-Ukraine conflict is also not, uh, you know, falling in place. So a lot of clouds remain, but Indian economy is pretty solid. So if you look at all the news that you're going to see, right, it's all pointing towards something really right happening with Indian economy. And viewers of Thinkers Frequency would remember, while S&P upgraded uh, the view on Indian economy triple B negative to triple B, then also if you look at the growth projections, right? World Bank and all of these people essentially from 6.3 to 6.5, 6.5 to 6.7. This is what these people are looking at. What India might just be going for is an 8% climb, right? 8% climb is no small deal, of course, which is obviously great news for everybody, which is just extraordinary news for everybody, right? So global risks, international risks, all the clouds remaining where they were. Indian economy is really looking bright at the moment, right? So if you there's a question coming in from Mr. Abhishek Sharma. It has been observed that there's always impact of US market on Indian economy, but will it be able to sustain in case US markets collapse? No, Indian economy is deeply dependent on US economy. If not deeply dependent, deeply related to US economy, Mr. Sharma. So if something wrong happens with US, of course there's gonna be ripples in the Indian markets, because money is connected, right? There's a lot of US money, there's a lot of Indian money. It's all very very connected. That's why we think about second order effects of everything, right? So right now, however, even US is really heavy on the data center play. So if you look at Indian capacity, it's right now 1.2 gigawatts of data centers, right? By 2032, we are looking at 9 gigawatts, right? When you look at US, right now it is at 38 gigawatts and it's expanding to 84 gigawatts. So it's just 35 times India's size, right? And uh, in as per 2032 projections, it's more than 10, almost 10 times, 8 times. So you're looking at 8x 9x capex, and a lot of capex is basically towards AI. So this particular capex play is hiding whatever problems exist in the economy, and it's doing it very well. So that's what's happening with US economy. Now all you need to see is whether this capex leads to better earnings for all these companies. At the moment, all the earnings are concentrated in one company, you know which one, right? So that needs to go spread across wide. That's the play which the economy is looking at. However, if you move on from that, if you want to have some humor is intact. So when you're talking about US, you'll also talk about the space play, right? So there's this gentleman who's heading the space commission, the NASA. Is it NASA? Not the NASA play. Let me just confirm. One second, folks. Yeah. So he's called NASA acting administrator, Mr. Sean. Okay. So he wrote, "We are in a race against China, so we need the best companies to operate at a speed that gets us to the moon first. SpaceX has been getting all the contracts, but we are moving up the competition, and we're going to allow HLS production to Blue Origin and other great American companies." Okay, that's what Mr. Adam from NASA acting administration said. And you know what Mr. Elon Musk said in response to him? Can you guess what Mr. Elon Musk said when the basically acting administrator of NASA said that we are going to open the space production contracts to other companies? He wrote, responded with a meme which said, "Why are you gay?" That's what he said. So Mr. Musk's response to the acting administrator of NASA was, "Why are you gay?" That is, of course, a meme reference. It's an African TV anchor who had some LGBTQ, you know, representative on his panel. So he was asking, he introduced them or whatever, and then he asked the question, "Why are you gay? Why are you gay?" So that was the accent. So that's a popular meme, and that's what Mr. Musk did too. And then he also called him like, you can't have the acting administrator of NASA having a 2-digit IQ and stuff like that. So that's humor. That's what's happening with US. A lot of to and fro between the oligarchs, as Mr. Bernie Sanders says, and the government. So let's see what happens there. We've talked about the markets, we've talked about the data centers. Yeah, so let's talk about the private capex play. When we're talking about capex, we're also talking about PLIs leading to capex. So there was this telecom PLI, which essentially talked about in 2021, right? Which talked about value addition in 4G and 5G products, right? 80% subsidies, claiming having only 5% local content. So despite the PLI, despite whatever incentives the government laid down on the telco equipment play, it's not really kicked in. Only 5% of local production, local value addition. Uh, Speaking of local value addition, electronics and smartphones have like a 28-30% value addition, right? They're targeting 38% by 2030 at the point at which, at the point which they'll be parallel to China as far as value addition in the smartphone economy is considered, smartphone manufacturing. Speaking of smartphone manufacturing, folks, India Indian shipments grew up. Indian shipments grew up, right? Up 3% Q2. And while the overall phone shipments grew up on the wholesale levels, the retail pickup seems dicey. What that means is that you might just be looking at an inventory buildup by Q4 because smartphones, while they have picked up, right, they haven't picked up at that scale where you'd expect some sort of glazing numbers. So definitely some growth in the smartphone markets as we've been discussing, but there could be some inventory buildup in the next quarter is what estimates are suggesting, which is pretty interesting because smartphone as an industry desperately needs some sort of push, right? So if you look at the numbers, smartphone shipments grew 3% year on year, reaching 48.4 million units in this quarter, okay, September quarter. However, despite overall improvement in consumer sentiment on the back of GST cut, smartphone specific recovery remains limited. So, even though the GST smartphones didn't get any GST rebate, right? GST was intact for smartphones, but even without any GST benefits, smartphone benefited from the whole paradigm. Why? Because of second order effects, because the money saved on cars, the money saved on other purchases went to smartphones, and that led to a shipment growth. But that shipment growth is not, in line with the optimism of the rest of the market, which might lead to a buildup of inventory. Speaking of buildup, right, of inventory and everything else, we are really looking at some uh, speaking of inventory and build up, the FMCG play has finally gotten resolved. So, if you remember, the FMCG play was in two minds on how to handle this particular GST rationalization, right? One way to handle the GST rationalization was to just reduce the prices, right? And when you reduce the price, the consumer gets the benefit, the government is happy, consumption picks up, right? The volumes. However, reducing prices is not possible with power packs, with the small packs that these companies have. Let's say a parlay or these people have 5 rupee packs. So what they've done is that they reduce the price to 4.45 rupees and so on and so forth, right? If you looked at Bisleri, the 10 rupee bottle was 9 rupees and so on. So that wasn't leading to any benefit because confectioners, the store guys, they were giving toffees in return, and they were basically rounding off the purchase price, the 1 rupee 2 rupee pack. How do you bring that down, right? So you can't. So the answer was anti-shrinkflation. Shrinkflation is basically when inflation happens, when mehengai happens. What companies start doing is that they reduce the portion size. So that's called shrinkflation. It's inflation with the packages getting smaller. So what happens when GST gets rationalized is opposite of shrinkflation. So now the packets will get bigger. So that's what these companies were talking about, right? The daily goods makers to move away from inconvenient price points, increase weights of packs to pass on benefits of GST cuts. Now I wonder why this didn't happen, right? Earlier, I mean that's what was the discussion all about. That have the prices go up, prices remain stagnant, and the packages get bigger. That's what the obvious solution to the problem was. However, it's not that simple. There's a lot of when you're increasing packaging, the packaging needs to get updated. This is the what do you do with the existing inventory, right? Which is already there. What do you do with that? There was an it's a developing story. So if you look at history as a process, you'll find out that these people suggested that let's put stickers, but putting stickers on like 9 months of inventory or 3 months of inventory is just a huge problem. So all of those things led to whatever they led to, and now it's going to be opposite of shrinkflation in the FMCG play. So that is the inventory buildup and how these stories were related. Let's move on to more developments. While we move on, folks, I'd remind you, at the risk of repeating myself, help this grow. I just got a message from somebody. Hey, I'm tuning into Thinkers Frequency, such a great initiative. That thank you. But instead of messaging, what you can do is write comments. You can share it on your WhatsApp. You can share, write posts on LinkedIn or whatever. Do what you have to do to help it grow, right? So that's the sell. Let's move on, folks. New funding routes on regional flight map. So regional flight map. Why is this important? The government has been building airports. Of course, the remote destinations, remote airports. There's a lot of airports in Northeast that are getting built and have been built, a few. And the government wants a lot of airports, right? But how do you have flights coming to those airports? That's not easy because those routes are remote routes. That means that there's no traffic. That if there's no traffic, there's no interest. If there's no interest, there's no traffic. So there's a cold start problem, right? There's a chicken and egg problem, that you need to have demand to have an industry, but you need to have an industry to have a demand, right? So that's what's happening. For spurring this, government is planning to aggressively push the Udan. Udan is a scheme. It's called Ude Desh Ka Aam Nagrik. Ude Desh Ka Aam Nagrik. So that's Udan. So scheme as it seeks to connect 120 new destinations in the next 10 years, sorry. Under the scheme launched in 2016, the fare is capped for half of the seats to make air travel more affordable. There's a lot of subsidies at play. The scheme will be expanded aggressively to encourage local players to, airlines, so that they can actually spur some demand. And once this cold start problem is taken care of, that's when the industry will flourish. That's the hope, that's the dream. What's the worst form of friction, right? Static friction is the most difficult to deal with. And that's what the government is trying to solve when it comes to airline growth in remote areas. Moving on. Jindal Empire is looking at buying ThyssenKrupp. We've talked about it. ThyssenKrupp, the German company, is selling its steel operations, the perhaps the oldest steel operations, right, in Germany, and they are looking at buying it. So the due diligence process is on. It's a huge company, 10 billion euros, I guess, revenues, and then net of 260 million something. So Jindal is looking at acquiring it. Jindal is on steroids, the Jindal Empire, right? JSW, Jindal, the motors play, the steel play, of course, the American manufacturing. They're just the paints business, the AkzoNobel operation acquisition. So Jindals are really killing it. And let's see how soon they can solve, or let's say they can conclude, the ThyssenKrupp acquisition. They are expanding very rapidly, says Mr. Abhishek Sharma. Well, that is true, but that's also an understatement to what's happening with the Jindal Empire. So if you look at Jindal, JSW, it's just crazy. They're literally expanding in depth and breadth all at once, right? So they're going everywhere. It's just crazy whatever they're trying to do. Just read your article on gold. It's golden, says Mr. Magesh Mani. Oh, thank you. Thank you so much. I thought it's gonna go viral. Nothing happened. Nothing happened. I wrote that article. I thought, man, this is the proper analysis. It's pretty sorted, well written. Everything. It's going to be one of my viral pieces. And then you know how many views it got on LinkedIn? I'll tell you a secret. It got nothing. It got literally nothing. Like it's right now at 3,000 views. 3,000 impressions. My usual articles get like a lakh views. So I was like, okay, let me write this piece. It's gotten more views on Substack than on LinkedIn. So, you know what the problem with LinkedIn is when you talk about articles? I'll tell you the problem of these social networking apps, especially LinkedIn. What they want is that they want experts in one field. Okay? So they have a very narrow view of humans. They think that humans are machines that operate in a niche. Okay? Very hyper specialized niche. So, what LinkedIn or its algorithm thinks about me is that I'm an expert in the startup play. Okay. So, what I write about startups, okay, uh, when I write about startups, it gets lakhs and lakhs of views because LinkedIn automatically promotes it coming from me, right? So if I position my thing as a startup news or a startup insight, if I write today about any startup, I pick up any startup in the sun and just start writing about it, blabbering about it, right? It starts getting lakhs and lakhs of views, and when that that's how LinkedIn sees me. But what I do is I don't do that, right? I get bored. So I don't want to keep writing about startups. Why would I do that? I mean, I would do that if I was a content creator full time, right? But that's not what I want to do. I want to just write for the fun of it, for the insight of it, because it helps me think. It refines my thinking. It leads to a lot of, uh, you know, uh, deeper thought, right? So if I write about, let's say, music, if I write about cinema, if I write about art, if I write about the global markets, if I write about anything, right, it just automatically doesn't push it because it thinks that humans are supposed to be operating in their niches. So no matter how many followers I have, no matter what is going on, right, it just doesn't get any traction because the algorithm believes that this person should be talking about startups only. Why? Because some of the stuff that I wrote about startups went viral, like 20 million views, right? So that's how they want to pigeonhole people. And that we discussed it, viewers of Thinkers Frequency would remember, right? It's a very bad way to look at humans. Humans are not supposed to be hyper specialized machines, right? We are supposed to be broad. We are supposed to think about different things, do a lot of things, right? So I'm very fundamentally against that. So even though I know that whatever I write about startups is gonna click, I just don't do that. I just don't do that. I don't want that virality. Screw that. I don't give a shit about it, right? Because I feel like I'm feeding the algorithm what it means. It's like, it's just a very weird feeling that now that you have the formula, now that you have everything, you know that this is gonna click. It's just so weird to just feed the machine like that, right? Also, it doesn't help my thought. I just don't sometimes don't want to do that, right? I just don't want to. Maybe it helps somebody to just keep doing it day in and day out. It's just very boring. uh, Mr. Magesh Mani says, any shout on crash is global knowledge now. Yeah, so what I tried doing there was not talk about a crash, but talk about the whole anti fragile aspect of dealing with the crash. So I pointed out, I drew a map, the graph of price of gold from 1971, right? Inflation adjusted, because that's what makes sense. Because before that, gold currencies were pegged to gold, right? So it doesn't make sense to have that graph so people draw 100-year graphs of gold, right? That doesn't make any sense because before 1971 currencies were essentially pegged to gold, right? So I drew a graph and I literally hand pointed out all the crashes that happened in the economy, like the Black Monday, the Iranian thing, right? All the crashes, I pointed them out, and I traced them on the price of gold, right? How gold, price of gold essentially dealt with all the crashes, so to speak. And that I thought was pretty insightful. So 1987, inflation, Iran crisis, the whole Iranian revolution, oil crisis, 73, 2008, of course, 2020. So that's what I tried doing. So it wasn't a crash kind of a thing. It was about the anti-fragile aspect of it. So a nuanced piece, didn't go anywhere, wasted time, but it's okay. But it's okay, it's fine. It's fine. If I want to go viral, I'll just write another piece about a startup, right? That's so boring. Anyway, moving on. Core growth has slowed down to 3-month low in September. Well, that was expected. It really had picked up a lot. So, if you look at output of coal, crude oil, refinery products, natural gas dragged India's core sector down to a 3-month low of 3% in September from 6.5% in August. So, the demand for oil and gas and petrol essentially comes down during, and even power comes down during winters, of course, right? So this is a leading indicator of demand, and it always happens. So it's a seasonal thing. It might just be an insight for somebody else, but not us, right? Not the viewers of Thinkers Frequency. Moving on, complex rules as a hurdle for MSMEs. GOBA panel, simpler regulation on 38-point agenda. 35% MSME contribution. These people are pointing out the panel. 35% of manufacturing input output is from MSMEs, 46% of exports, and 30% of gross value addition. And 1,400 compliance processes per year, 40 regulatory changes per day. So that's the problem. That's the problem they're solving. They're also looking at FSSAI, by the way. FSSAI, by the way, as something to solve for. What do you think about FSSAI, folks? What do you think about the fake paneer play? One second, I got a comment. Thoughts on crash impacting real estate and land prices, says Mr. Vaibhav Manocha. Well, that's a complicated question. Real estate and land prices. Definitely real estate. No, there's no definite answer to that. So let me be a little less confident. Real estate. How does real estate factor in a crash in the equities or the fiat play? Right? I think it's gonna go down. If a major crash happens, real estate might just be a little bit of an issue, because a lot of demand that real estate, the fundamental, the thought behind what I'm saying is that if the demand of the real estate gets hurt, real estate will get hurt. So if you look at what happened to real estate prices just as a reaction to TCS firings, right? The second order effects of TCS firing, they spelled bad news for the real estate industry. And for obvious reasons, because a lot of real estate demand is driven by these sectors, right? If they go down, real estate goes down, is my way of looking at the situation. So you can share your thoughts, Mr. Manocha. Yeah, so we were talking about FSSAI. It's a joke, says Mr. Tiwari, and Mr. Sumant Kumar says, I feel FSSAI is not at all functioning in the country. Well, of course it's not. FSSAI is a definite is a cruel joke on the Indian people. But here's the question. So if you find a vendor or a manufacturer, right, who's selling fake paneer, which is basically poison, that analogous paneer is not edible, it's not supposed to be eaten, right? It's definite poison, and it screws your blood reports. It's supposed to be, protein is a beautiful source of paneer is a beautiful source of protein for vegetarians, and it's anti that. It's just very, it has harmful effects. So if you find a company doing fake paneer, or let's say fake khoya, and a lot of these factories were seized, in UP recently. What should be the punishment? First of all, for the factory, and secondly, the operator, because this is murder. Am I wrong? Am I wrong when I say that selling fake paneer is basically murder at scale? So if you're selling paneer, which is laced with chemicals, which is not supposed to be eaten, is it not murder of people? And if it is murder, what should be the ramification? Should there be a homicide case? Should lawyers get on the backs of these paneer manufacturers or these khoya manufacturers or basically adulterated food manufacturers and book them on criminal charges instead of civil charges. So right now what happens is, let's say if you have this factory and you make fake paneer, you make fake whatever, and you get caught, right? The most what can happen is that you just pay off and you get. But if a lawyer gets on your back, he'll charge you for civil liabilities. Shouldn't this be a ground for criminal proceedings where you actually charge somebody for murder? And what you need to do for charging somebody for murder is basically just collect some evidences of lives lost so that's the hard part, legally speaking, that it's hard to establish the causality of the lost life with that paneer only, because it's very difficult, right? There could be different reasons for somebody dying and it would be hard to nail it down on paneer. But shouldn't it be tried as a homicide kind of a play? That's something that I wonder. What are your thoughts on it? And what do you do with somebody with people who gave them the clearance, if at all they got the clearance, right? People who are supposed to be responsible for the authenticity of it. If something as basic as food is getting adulterated to the level at which it can actually kill people, what do you do? Uh, some comments. Mr. Magesh Mani says, by the time judicial proceedings end for paneer verdict, we would have moved on to the next thing. Tofu. Uh, Mr. Abhishek Sharma says, completely agree. Very good point for lawyer to file litigation. Mr. Tushar Tiwari says, what shall happen to the government Babu who approved? That's exactly my point, Mr. Tiwari. Right? What happens to them? I mean, should they not be booked for murder? Would it not actually increase the case gravity of the situation? Let's say if you get somebody who died because of these food products, right? And then you trace it to the people who made the product, and then the people who approved the facility at which the product was made. Should you not just book all of them for murder, right? And take them on, right? But Mr. Makesh Mani is of course right when he says the judicial proceedings would be hurtful. The feedback, Mr. Manocha has a few comments. The feedback cycle of consuming adulterated food is long, hence difficult to have clear evidence. Yeah, that's what we discussed. But as a lawyer, I'm tempted. Right? Anyway, I mean, as not a lawyer, but somebody who comes from a family of 4 generations in law, it's very tempting to actually go that route. Anyway, moving on, folks. FSSAI is such a joke and such a cruel joke, man. Just imagine a vegetarian guy, like I'm a vegetarian, right? They talk about paneer, protein. So I think like let's have paneer, right? So if I'm going out and I'm like having paneer tikka because it's beautiful, it's healthy, it's right, it's nice, it's cool, and then I find out that I'm basically eating poison, right, for $500. Pathetic. Anyway, moving on, folks. A lot of political chit chat which we best not discuss, folks. My God, what's happening? What's happening in the world of politics, man? Unbelievable. Unbelievable. Right? God damn it. Moving on. We've talked a lot about ThyssenKrupp. I'm just looking at if I'm missing any number. Right? No, I'm not. Adani Marathon Inc. joint venture for 3,400 crore Mumbai project. So that's a real estate play. 3,400 crores. Project will come up in Baikola to have over 1 million square feet of office and retail space. 1.6 million square feet, right? Commercial complex in Lower Parel. So this is huge. This is obviously huge. What Adani is doing in the biggest slum of India. Which one is this? I forget. Which is the biggest slum of India and Asia? Dharavi, right? So Dharavi's redevelopment plan, that is something extraordinary. So a lot of action happening in Mumbai real estate, even though the city is Dharavi, says Mr. Sumant Kumar. You're absolutely right. Mr. Abhishek Sharma, you as well. What's happening in Mumbai real estate is pretty crazy, because everybody wrote Mumbai real estate off because it was so saturated, but they somehow found a way to make it happen again. So if you remember, viewers of Thinkers Frequency would remember how we talked about uh, the redevelopment of old buildings, right? That regulation coming down, so the buildings going end of life, and it's going to be easier for developers to actually rebuild, and then land acquisition play. So a lot of things happening. Moving on. Unilever's spin-off of Magnum in trouble because of US shutdown. That's okay. Also, Indian Magnum, if you don't know, Unilever, the giant FMCG, the biggest, has a company called Magnum. So Unilever acquired a few ice cream companies. Ben and Jerry's was one, Magnum was another. Then there was Waltz, right? So they are delisting, or let's say demerging Magnum, but that demerging essentially hasn't been able to happen in US. So they're going to demerge and delist. Even though US has this Make America Healthy thing, they are still delisting it because they see a lot of prospects, right? If you want to read a great book about the ice cream business, right? Great book, which is like perhaps the best book on the ice cream business. It's One Scoop at a Time. It's the biography of Ben and Jerry's, the founders of Ben and Jerry's. They really wrote a beautiful book. Beautiful. It'll make you cry, and it's also very insightful. Extremely insightful, extremely movie-like. And John Travolta was supposed to play Ben, right? The person who founded Ben and Jerry's, but that movie didn't take off. But anyway, it's a great book. One Scoop at a Time. Don't forget. Mr. Azam Big says Dharavi. Correct. Moving on, folks. Coca-Cola has also come out with less than expected, India volumes. So Coca-Cola's India business didn't do as well, right? Why do you think it didn't do as well? We've talked about this, folks. Viewers of Thinkers Frequency, please take a few moments and think about why Coca-Cola's business didn't do well in the last quarter. We've talked about this. It had very interesting ramifications. That one thing had very interesting ramifications. Can you guess? Early monsoon, Mr. Tiwari, you're right. No, not Reliance Impact. Oh, although it could be. But they've not admitted it. So they say monsoon. Mr. Tiwari is right. Monsoon led to lower sales of cooling products, even ice creams, even cold drinks. So that really hurt the whole beverage thing, right? Reliance monsoons really screwed it up. Early monsoons, and that's what happened. Moving on, folks. How things happen, right? It rains early, AC stops selling, the company goes bankrupt. Moving on. We've talked about how the gold fall will impact the Indian markets. We've talked about oil and gas PSUs, capex. We've talked about subsidies for airlines. So this is what I do. So if you've noticed, folks, viewers of Thinkers Frequency, how I take the monologue is that I basically cover almost all the things in the beginning itself, and then we drill down deeper in individual stories, right? So you get a whole full coverage of major items, major insights, right? And then we sort of drill down. So that's how our R is structured, which I think is pretty awesome, right? I mean, it's something, and it also helps my way of speaking because I don't have to shift through different pieces. So I've noticed when I shift to different pieces, my way of speaking essentially starts to falter. I start stammering, I start stuttering because I'm reading different things, right? But if I collect all of those things and I put them all together at once, it becomes like a more fluid, more coherent monologue in the beginning. and then the dialogue begins when we talk about individual stories in depth, right? So these are little things that we are doing. Mr. Azamberg, Mr. Weber Manocha and Mr. Azamberg also wrote comments on the Coca-Cola story. Campa launching its products. So that seems to be a mainstream view. Campa must have heard Coca-Cola's. And Mr. Azamberg says wet weather, affordable, competitive products, increase food and nutrition awareness, and food farmer. Well, the influencer play, food farmer. Do you think health has any impact on beverages, on soft drinks? I don't think so, Mr. Beg. I mean, I'd love to believe that story, but I don't think so. I don't think. The health narrative is an extremely niche narrative focused on very small segment which is very very hooked to social media. When you talk to the average consumer, they don't give two shits about how unhealthy a Coca-Cola is, right? Or a Pepsi is. They're gonna drink it anyway. And that's not my reading of the situation. That's the market's reading of the situation. So if you look at the market, and if you look at all the health companies, right? Interesting comment by Mr. Tushar Tiwari, I'll say it. But if you look at the health market, the health beverage market, it has had a cold start problem. If you start a health brand today, right, it's gonna sell less than how it will sell if you just don't talk about health. And that's why Reliance is not focusing on health at all. So even if Reliance buys a health drink, right, it's gonna be a very tiny niche of the entire market dominated by the usual sugar syrups. Mr. Tushar Tiwari says, I just switched to Diet Coke at Max. And that's an honest admission of whatever happens. So while Mr. Food Farmer might have done great work, no ground impact as far as the major consumption play is considered. Moving on, folks. Coal imports down, tad, in August. Why do you think coal imports are going to be down in August and September, folks? You can guess. We've talked about this. India is keen to increase its exports to Russia as it firms up the counter of trade deal with Eurasian Economic Zone, right? Trade has risen largely on energy. We've talked about this. So we talked about how India could look at solving the tariff situation with US. We talked about this, right? We've talked about it enough. Viewers of Thinkers Frequency obviously know that the way to solve a falling market is to, number one, solve the domestic consumption, which the government tried doing with the whole GST rationalization. Number two, you find alternate markets, right? Find alternate markets like you find Russia to get your shrimp, right? You find Middle East, you find Africa, you find Australia, you find Europe, you find better trade deals there. Number three is to reroute your own products with different manufacturing pieces. So that's what China did, right? When China faced a lot of tariff, Vietnamese industry started picking up. Everybody thought Vietnam is suddenly a monster when it comes to manufacturing, and then people figured out, no, it's just Chinese products getting rerouted. So India also needs to do that, would need to do that. It will set up its diamond polishing or whatever in Middle East and Morocco and Africa and so on and so forth, right? Then that's the third play. What was the fourth play, folks? What was the fourth play is, of course, the macroeconomic play where you try to devalue your currency, right, to keep your exports competitive. So that's the fourth way to deal with the situation. So there's economics, there's finance, there's geopolitics, a lot of things at play. So that's obviously going to get on. India keen to sell marine farm goods to Russia. Exactly. The shrimp play, fresh foods, fresh vegetables, spices, marine goods, and so on and so forth, right? But Russia is a very small economy. Adjusting for PPP, it's like a 7 trillion economy. So it's not going to help a lot. But yeah, anything that can happen is gold, right? Anything that can happen is gold. US transshipment tariff most likely to hit machinery chips. Impact across ASEAN, India, Mexico. Well, US tariffs are obviously going to hurt. Moving on, dual valuation proposed for NPS and APY portfolios. NPS, the National Pension Scheme, and APL is Atal Pension Yojana. These are two pension schemes, of course. So what do you mean by dual valuation? Dual valuation is there is number one, you mark to market. Mark to market is when you see daily price movements or whatever, right? That's basically one way of valuing. The other way of valuing is essentially, uh, you know, long only funds. What was the other way? So the total AUM of these two schemes has come at somewhere around 16 lakh crores. 16 lakh crores is about is must be about some 20 billion, 18 billion dollars, right? 18 billion dollars is a lot of money, a lot of money. So uh, yeah, so the dual valuation play, I'll just tell you. Yeah, one is the accrual basis, where income is recognized as it's earned, showing stable long-term returns, and then the mark to market, where value changes daily. So accrual and this whole mark to market is how the pension funds are going to be showing their valuation, so that people can have a daily and a long-term and a short-term view as far as the whole play is considered, which is nice. Which is nice, I guess. Moving on, folks. Moving on. Quick question. Despite Russia being much smaller economy compared to US, how is it able to stand head to head to US? Well, because asks Mr. Abhishek Sharma. So Russia used to be, of course, it's a long Cold War play, but Russia, USSR, the major empire. Russia, while being a small economy, because it's very less people, right? A lot of the landmass that Russia has, it's uninhabitable because of weather, right? It's very cold, so Russia has very few people. But even though the economy is small, the sectors in which that economy is playing out is very critical. So Russia has the highest number of nuclear warheads. It has more nuclear warheads than US, right? Then Russia is also a very big source of critical minerals, energy, oil, gas, and so on and so forth. And its gas and oil and energy are supplied to Europe. It's basically Europe's energy supply, right? Its pipelines basically move the world. So defense, then energy, then of course some other trade, right? Minerals. That's where Russia stands ground, and also it's still so ambitions of Russia, Mr. Putin, they are to bring back the Soviet glory. So that's obviously a risk. Although it's not an economic threat, but defense-wise, it's probably huge, right? So that's why Russia stands head to head with US. Now the question that you asked is why Donald Trump got elected. This is the question. Why Donald Trump got elected. So the whole US narrative of framing Russia is the enemy is the Democrat narrative of running things, right? So they've been talking about it. They pushed war against Russia. So all the Ukraine-Russian conflicts happened during Barack Obama, during Joe Biden, not during Trump. And Trump came up with the play and says, Russia doesn't need to be US enemy anymore. The real US enemy is China, which is a bigger economy than us, adjusted for PPP, right? Which runs the whole world's manufacturing, which owns everything. We can't move a muscle without China. So China is the real enemy. Russia is not. So that is the question which he framed. And that's why he got elected. So he said, why do we have NATO? The Northern Atlantic Alliance. I always forget the full form of NATO. NATO full form. It's North Atlantic Treaty Organization, right? So why do we have NATO? Is Russia still looking at occupying Germany? And if we are still in NATO, then why are we paying all of it? Why don't European companies pay for NATO, right? Because we are supposed to be protecting them, right? So they need the protection. They should pay for it. They should pay their fair share. That's why he got elected, essentially, which is pretty incredible. So what the question you've asked is the question the American right asked, and then they elected Donald Trump. Moving on. Fertilizer imports spurt in September. Good rains raise hopes of strong Rabi sowing. So Rabi sowing season is in. Fertilizer imports are in. Fertilizer imports were in trouble. You know why? Viewers of Thinkers Frequency, remember why fertilizer imports were in trouble? Because China. China halted its fertilizer exports to India. India was running helter-skelter. It was going to Russia, it was going to Saudi Arabia, it was going to Morocco to fix those agricultural supplies, because Mr. Abhishek Sharma says China, you're right. So that's what happened with India. But now, good monsoons, they've retreated. Agricultural, good rains helped the rural economy as well. So we expect some good Rabi sowing season. That's why I said, there's good news for Indian economy from all sides. So this is the agri play which is coming into the equation. Right, moving on. Railways boosts crowd control. Railways obviously firing all cylinders. Railways critical for India, for the freight movements and also for people's movement, right? So a lot of action happening on the railway front. Moving on, folks. Bigger share of NSE pie may go to clearing arm. So NSE is going to so clearing. So how trades happen? What happens in the trade play. So there's NSE, of course, right? There's investor, then there's the broker, right? Then there's the exchange, then there's the clearing corporation, then there's the depository, NSDL, CDSL, and then the clearing members. So that's how trades happen, right? The broker, the order is placed, right? Broker, then order is executed on NSE, then the trade details are sent to the clearing house, clearing corporation, and then this clearing corporation essentially takes the risk, right? It takes all the risk of the trade. So even if somebody defaults, the trade has to be executed, right? The legal counterparty of both sides, and then trade netting and obligations happen, and trade settlement after the day. So now what's going to happen is that NSE subsidiary, the NSE clearing house, it's going to get more share of the revenue. About 5 to 6% fee is shared with the clearing arm right now. It's going to be 25%. This all is happening because NSE is going to get listed, right, sometime. And no. Mr. Sumant Kumar says clearing corporation is only for foreign trade, I guess. No, not at all. Not at all. So it's for all trades that are executed, right? So that's what's happening. Some changes as the organization of NSE for getting listed. So all of these things are happening. A working group is examining if clearing members should support and contribute towards settlement guarantee fund. Settlement guarantee fund is, of course, the fund which is used to manage some shortfall or some problems as far as execution of those trades are considered. No change in consolidated earnings of NSE. The issue is to be sorted out before NSE's IPO. Well, we've talked about this, folks. Moving on. DBS done very well. DBS was Lakshmi Vilas Bank. It got acquired. DBS is a Singaporean play, I guess. Singapore's banking major DBS built a solid base. Really grew. SME book has grown to 10,000 crores to 40% CAGR, and we're closer to 13,000 crores by FY26. So it's huge, and they've done really well, and they're saying that we're going to be a complete bank. So DBS doing really well in India. That's okay. Goldman basket shows painful month for shorts. Most shorted stock basket jumps 16%. Screws the short sellers in the rear, right? I mean, they're really hurt. All the short guys, they are supposed to, because everybody is looking at a crash, right? As Mr. Magesh Money said in one of the comments, right? What did he say? He said something very interesting. Any shout on crash is global knowledge now, right? So short sellers were very active, but they lost a lot of money. Of course, they lost their shirts and their pants. So it's very weird. Whatever is happening. Most shorted stock basket jumps 16%. Bearish traders rush to cover positions, right? Oh my God. Anyway. A widowmaker trade becomes world beater as Japan's bonds sink. So, once a money loser for international funds, Japan's widowmaker trade now delivers outsized bond market gains amid turmoil. So, you know what widowmaker, anybody knows about the widowmaker trade, how this works? So again, Japanese play has been that they've not raised interest rates. There's been no, in fact, they've had negative interest rates, right? So what the world does is it borrows in yen, invests abroad, gives it back in yen, right? That's the way the things have growing. So in the bond trade, the widowmaker trade essentially happens is that you borrow in yen and you short sell. You sell the Japanese bonds. Now, since Japanese bonds go down, right, yields to rights, you basically uh, lose money because bonds don't fall, right? The yields. So now Japan never really tightened. The quantitative tightening never really happened in Japan. So the yields were low, right? Now yields are going up. Now yields are going up, bonds are actually going down. So bonds are going down. So when you're actually shorting the bond while borrowing in yen, you're actually making money. Earlier, you didn't used to make money because the bonds never used to go down. So that's called widowmaker. So for nearly 30 years, global bond traders have bet that Japanese bond yields would rise and thus prices would fall, reasoning that ultra low interest rate couldn't last forever. So that's the reasoning that ultra low interest rate wouldn't last forever. So they would borrow in yen, short Japanese bonds, and expect things to happen, right? But Japan never really raised the interest rates, so they always lost money. But now this has changed because Japan has actually started raising the interest rates. They're looking at an inflation of 2%, right? So they're raising interest rates, they're changing the economy, they want to do a splendid blitz, and so on and so forth. So now, widowmaker bonds are actually starting to make money now. That's pretty interesting, right? Japanese play has always been interesting, very, very interesting in the world of finance because how people have been, uh, taking money in Japan, then returning money and investing everywhere. That has helped a lot of people. That's basically been how US markets have been green, right? Because what people did was they just borrowed in yen, then swapped it, then invested wherever, and then just returned it because there's no interest rate, right? So Japanese liquidity essentially fueled the rest of the world for a very long time, but that's not going to happen. I mean, it's going to happen, but at a lower rate. Widowmaker, not such a widowmaker anymore. It's interesting, right? How Japanese bonds have such interesting names, samurai bonds, widowmakers, and so on and so forth. Anyway, moving on, folks. There's a lot of geopolitical play. Trump Putin Ukraine meeting on hold. Uh, Japan, by the way, got its first female prime minister. Very interesting. Warner Brothers is exploring sale amid multiple bids. So Warner Brothers, Discovery, they were looking at keeping their streaming play alive. TV, not so much. Netflix wanted to buy their streaming play. TV, not so much. So they've been trying to demerge. David Ellison, son of Larry Ellison, is looking at those assets. So a lot of acquisition plays happening. It's all because of the death of linear TV and problems with the studio. It's been a very, very big deal. So Paramount is reportedly trying to acquire the company. Initial bids below $30 a share were rejected. So everybody's concerned about the whole TV play, right? Nobody wants a piece of that, but everybody wants a piece of the IP, so to speak. By the way, Trump signs $20 billion lifeline for Argentina. Argentina is not doing very well. So Javier Milei, the star, president of Argentina, he was looking at revolutionizing Argentina, and numbers were looking good, but not so much. So currency has been getting devalued, right? The peso is not doing well. Argentinian peso is going to the toilet, right? So they need a lot of money and private and government credit in the form of Trump support to Javier Milei. Let's see how Argentina does, man. There were a lot of hopes for Argentina as it basically got Javier Milei, but the situation is harder, right? So whenever people start looking at revolutions, right? One person who will come and in a year things change, right? I never take it seriously, right? Just as I didn't take the whole Israel Hamas play seriously. Why? Because it's too TV friendly, right? You don't want to do a TV friendly thing, right? It's a problem if it becomes too TV friendly. Whatever's too good to be true is often not true, and that's always a good heuristic, right? So you wait for the things to settle down, you wait for the results, and then you look at something, right? Moving on, folks. Amazon's secret plan to replace workers with robots, company that changed how people shop, has a far-reaching plan to automate 75% of its operations. Well, nobody's sad except for people who will get fired, but even people who are getting fired, will get fired, are very sad about working for Amazon. So they say that Amazon is a shithole, worst place to work. It has always been voted as the worst place to work. So that's what's going on with Amazon. Maybe it's going to liberate those people and then they're going to miss their jobs, right? So sad, so sad. AI talent war looms, global tech comes talent fishing here. That's okay. With that, we come to the end of the 149th episode of Thinkers Frequency, folks. Consistent viewership of about 13 people. Oh man, when are we gonna cross this 13 people viewership, folks? when when is it gonna happen, right? 9-10 people on YouTube, 5 people on LinkedIn. It's like, I wish it could grow. I wish it could grow, but it's very nice. It's very nice. It's a lot of fun regardless, right? So screw virality. Like, I have weird concepts of life. I could be writing viral articles, but I like doing this a lot. This is a lot of fun, right? And I hope it's fun for you. I get to read a lot. I get to learn a lot thanks to you. It's always so much fun to do this in the morning. Our daily mental workout, our daily dose of insights and analysis, which don't lead to paralysis right before we punch in. It's 9:19. We are going to punch in anytime soon. I should quickly thank Mr. Sumant Kumar, Mr. Abhishek Sharma, Mr. Magesh Mani, Mr. Tushar Tiwari, Mr. Then some folks on LinkedIn, Mr. Vaibhav Manocha, Mr. Azam Beg, and everybody else who joined. Thank you so much. It's so fun. I hope you liked the episode. I hope you had fun. I hope it added value to you. I wish you a beautiful day personally and professionally. And I hope to see you same place, same time tomorrow, hopefully. Right? So please take care. Have a beautiful day. Mr. Ashutosh Bhandekar says, it's always fun and eye-opening to consistency. What we have maintained. Wow, that's beautiful, right? And not just my consistency. So if you look at Mr. Tushar Tiwari, Mr. Chirag Patil, right? Mr. Regular viewership, right? People like watch it like every day. So if I don't do this tomorrow, I could just have Mr. Tiwari and he would be able to do this, right? The Thinker's Frequency can work, right? That's how confident I am. Mr. Abhishek Sharma, it will definitely grow. It's fun. Thank you for your time. Have a great day. Have a beautiful day, guys. See you tomorrow. Bye-bye. Take care.